Wow, Alibaba is up for 7 consecutive days. Alibaba has left the train without me. Said, see you later. You have no money to get on the train. Basically, I lost 40K last Friday. I did a video. They were call options that expired that day. And those calls, I actually bought them last year and I just kept averaging down because the value of it just went down. And next thing you know, they went from $40,000 all the way to zero. And then afterwards, Monday, it just started to rally. I had 75 strike calls, 80 calls, and 90 calls, all expired worthless. And I've been buying weekly calls. And this is the only week that I didn't buy any calls. And guess what? It goes up every single day. What? I have really bad timing, the worst luck. But here's the question. Do you think this is the time where Alibaba breaks above 76, 77? Or are we going to continue this pattern and go back down? There was an article that came out. It says Alibaba stock rose on Friday amid its longest winning streak in a year, but investors shouldn't be too excited. Shares in the Chinese tech giant are still near multi-year lows with lots of reason for caution even as the bull case looks exciting. Shares in Alibaba rose 2% U.S. pre-market trading on Friday with the stock on track for its 7th consecutive day in the green. That would be the longest stretch of gains since January 2023 when the shares also rose for 7 straight days. Even though Alibaba is on the up and up, the stock price is still historically low. Having closed just north of 75 on Thursday, the shares on the lower end of their 52-week trading range between 66.63 and 102.50, with the 60s being a multi-year low zone. Alibaba's stock is down more than 75% from its late 2020 record high. Decline started in earnest with regulatory pressures on the Chinese tech sector, which battered Alibaba through much of 2021 and 2022 with COVID-19 lockdowns and a surprise economic slowdown in 2023 and 2024, only making matters worse. The trouble for investors is that the bull case for Alibaba is so exciting. The company is among the world's largest e-commerce businesses with a strong footprint in the high-growth cloud computing and artificial intelligence space. By all metrics, the stock is a screaming value buy and technically extremely cheap. But Alibaba shares have shown themselves to be more like a value trap than a Warren Buffett-style value play. Wall Street remains optimistic. Alibaba stock is overwhelmingly rated at buy among analysts, with an average target price implying upside of almost 40%. But in order for Alibaba to make a real recovery, there needs to be a sustained rebound in the Chinese economy. And that's far beyond the tech giant's control as China faces headwinds for waning consumption in a distressed property sector. Many of the recent short-term rallies for Alibaba stock have come on whispers of Chinese government stimulus, with the stock often pairing gains as reality sinks in or Beijing tempers expectations. Another example came this week amid signs the People's Bank of China, the central bank, could engage in bond trades, which may be seen as a precursor to quantitative easing, which is accommodative and stimulating monetary policy. However, the PBOC has clarified that its plans to start trading government bonds are aimed at managing interest rate risk, not conducting QE. This reinforces our sense that large-scale monetary easing remains unlikely. This poses a threat to the current cyclical upturn in growth. Again, is this just another fake rally? What is it going to take for this to break above 76? And is it time for me to get in? Do you think I should buy calls right now, today? Well, I don't have money, but if I did have money, should I buy calls? I feel like this happens to me all the time. I lose everything, and that's when the stock goes your way. But when you're in the trade, it always goes against me. Why? Let me know. Did you make money this week? And thanks for watching.